quickly take it across to Ashesha and get in the print. And Ashesha, seems like a good set from UltraTech.
From cement major UltraTech Cement, and across the board it's a beat. Whether we talk about spreads or whether we talk about the revenue, volumes too have come in higher than what we're working with. Revenues have risen on a sequential basis. Revenues have declined by 4%, but we were expecting about 14% decline. So as compared to expectations, numbers clearly have been a beat. Margins meanwhile have come in at 20.3% versus expectations of 20.2%. So even on that front, it's better than what the street was working with. But let's talk about volumes then, and we were expecting volumes in the range of 40 to 41 MTPA, and it has come in at 41.3 million tons. So again, over here on the volume front, it's a slight beat versus expectations. Now remember, EBITDA per ton of course was expected to decline because raw material prices have risen because of West Asia crisis. We have power costs, fuel costs, logistics costs, all of them have gone up on a sequential basis, which is why spreads look weaker when we compare them on a year-on-year and on a sequential basis. But for the first quarter FY27, spreads had come in at 1214 versus expectations of about 1180. So as compared to expectations, spreads have been higher than what we were working with. As I mentioned, raw material prices have risen 4% sequentially. Fuel cost has gone up by about 5%, and power costs too have risen, and that weighed heavy on the spreads of the company this time around. Other than that, of course, the company has also given some commentary on the wires and cables business, and they said that they're on set to launch their wires and cables business in the third quarter of FY27 itself. They've reiterated their timeline of launching the wires and cables business. Trial production of wires is currently underway, and out of the total planned investment of 1,800 crores, about 888 crores have already been invested in the company. Now, as far as capacity expansion and capacity expenditure is concerned, the company says that they will be increasing their capacity by about 16 MTPA by the end of this year, and the total capacity is likely to come in at 242 MTPA by the end of next year. So capex plans continue to remain intact. 240 MTPA has in any case been their guidance for FY28, so that also continues to remain on the positive side. So all in all, numbers have been better than what the street was working with, and even when we compare the volume figure and the EBITDA per ton figure, it has been better than street expectations.
Okay, thank you so much for that, Ashesha.